Hello everyone, it's just after 9:30 here in Perth, so we'll get things underway. Before we do, just some housekeeping to mention. Today's presentation was released to the ASX this morning, and this webinar is being recorded and will be available on our website. Stephen will take you through the presentation and then we will have Q&A at the end. We would expect that many of your questions will be answered throughout the presentation. Thank you to those who have submitted questions via email. We have quite a few of those and we'll answer them once the presentation is finished. The email address is webinar@lucapa.com.au. If you have follow-up questions after the webinar, please email us. My contact details are on every ASX announcement which goes out. I will now hand over to Stephen Weatherall, the Managing Director and CEO of Lucapa Diamonds, to commence the presentation.
Thank you, Candice. And thank you everyone for joining the webinar today. I look forward to this webinar and the others that we will hold on a periodic basis going into the future as well, to keep our shareholders and investors updated through the course of the year. I think there are many participants that will be participating today. I think that if we look at all those that have registered, we will cover 6 of the 7 continents. So certainly our investors go far and wide. I think that most of you will have already flicked through the presentation. So what I will do is walk through it on a slide-by-slide basis. But I think I'll also consider a number of these slides placeholders and perhaps provide a little bit more color as to each and every operation as we walk through it as well. You'll take note of the cautionary statements, please. As with all public releases, we're obliged to provide them. Please do read these in your own time. A copy of this presentation is available on the ASX platform and our website. As you'll have known, we have focused on growing in recent years, and we operate across many jurisdictions, which now include Australia. Lucapa acknowledges the traditional owners of the land on which we operate, and we pay our respects to all the elders. Just an overview of what we'll be going through today on the presentation. As I mentioned, I think I'll provide a little bit more color as we walk through all the operations as well and what to expect in 2023. But we'll be overviewing our strategy and our assets, the Lulo alluvial mine, our kimberlite exploration, the Merlin kimberlite mine development, Mutai, and what the future we believe holds for Lucapa. Many of you will have seen this graphic in a number of our presentations. Most certainly, it's an important graphic. We'll see how we have, or you can see how we have grown across 2 continents, operating many projects that we believe gives us a great ability to deliver both short-term value through our producing assets and near-term developments, as well as long-term value to our shareholders through our very prospective kimberlite exploration programs. I'll spend a little bit of time on this slide. I think it's important just to overview Lucapa, where we've come from, the pillars of the industry that we now operate in, and why we have meticulously over the last 6 or 7 years focused on growing through the diamond value chain in order to unlock value for Lucapa and our shareholders. I think many on this webinar will certainly have become shareholders in Lucapa a number of years ago, where Lucapa was just an exploration company. But over the last 5 or 6 years, as I've mentioned, we've focused on that growth. We've focused on building a cash generating base, which will ensure we are here for many years to come. We've also focused on making sure we've got development assets. I'll talk to Merlin just now, but Merlin is not our first development asset. Mutai was our first development asset, brownfields development asset that we brought into production, and we look forward to bringing Merlin into production in due course as well. Exploration has not gone away. Exploration has not lost any focus. We continue to focus our efforts and our technical teams work day and night to unlock the geological equation that we deal with in Angola. And I think from recent news, you can see that we are certainly making a good headway there. The reason why I note our investment and the time we have taken to build across the pipeline is to ensure that we continue to drive value and create the value. Our industry has got a number of explorers, pure explorers, some with good ground, some with not very good ground. And if you remain an explorer and do not deliver immediate gratification, your share price tends to take a hit and you end up languishing. I won't name names across our industry, but there certainly are a number of pure exploration, diamond exploration companies out there on many exchanges around the world that have market caps of less than $15 million. Now, if you don't change your strategy, if you don't add to your asset base, if you don't create a cash generative base, be that through mining or be it downstream involvement, I believe that future certainly lay ahead for Lucapa. So the board, the management team, and strong shareholders supported our initiative, and that's why we have grown the way we have. Our industry needs a larger company. We need to attract additional investment. We love all our shareholders. Some are more infuriating than others, but we do love all our shareholders. We need our retail shareholders. We need our funds. We need the larger investors. We need our high net worths. We need the multitude of investors to come through. But we believe that the one kind of investor or the one type of investor that we are trying to attract additionally to our register is the very large investor that can assist in building the company into a mid-tier, much, much larger company. So we're focusing on growing. We're focusing on attracting those kinds of investors. And the only way to attract those kinds of investors is to operate through the diamond value chain in exploration, in development, in mine production, in polished manufacturing. So I hope I haven't bored you too much with a little bit of background in the strategy, but that is why we focus quite considerably on making sure that we offer our investors an array of opportunity and value creation through the diamond pipeline and not just on exploration. So just moving into those pillars, I'll address them as they are on the screen. We started our mining journey in 2015 with Lulo, very, very special, small niche mine delivering some very, very good diamonds. But as you can see there, we focused on growing, bringing in additional revenue generating assets. We believe by adding to the revenue portfolio or cash generating portfolio, we'll certainly be able to attract and grow the interest that we're trying to seek in the market. So as you can see, from 2017 to 2022, we have significantly grown our production capacity. We're on a 100% basis. We are well into the 60,000 carats that we generate annually. That is some 250% increase in carat production over the last 5 years. As you can see from the small inset there in the graph, we certainly believe that our kind of production is the production that you can accrete additional value from polishing and moving downstream, closer to the consumer. That is why we partnered with Safdeco and Graph back in 2019 already to start cutting and polishing diamonds to accrete additional value back to the mines. It has been a very successful partnership. We continue to put product into that partnership, and we continue to generate margins back to the mine. These are margins that have for many, many years eluded the miner. And I'm proud to say that I think we started something here because there are a number of producers who have moved into this arena and started to cut and polish their own product. From a development perspective, as I mentioned, we have already put Mutai into production. We bought that as a brownfields exploration or brownfields development opportunity and have brought that into production. But the current development opportunity that is in front of us is the Merlin development opportunity. I'll talk to that in a little bit more detail later on, but it is a significant acquisition for Lucapa. It is a significant development for Lucapa. The opportunity that Merlin holds for us is not to tack on or add another small mine to our portfolio. The Merlin mine and what we have scoped in our hybrid open pit and vertical pit mine development will transform Lucapa Diamond Company. It will elevate us into a mid-tier diamond company. And as I mentioned earlier and labored on a little bit, I think it's to attract and keep attracting more and more investors to our register. And we are focusing on attracting larger and larger investors. And certainly as we grow as a company, if we start to get to the $300–400 million kind of market cap, we certainly will be bringing those investors to the register. But I'll take you through a little bit on more on Merlin shortly. Our exploration programs at Lulo, Brooking, Arapa, and more recently Merlin, they're important exploration programs. Our Lulo exploration program in Angola has for many, many years been the most prospective program in the industry. We have furthered it meticulously, methodically. You can read into those two words that when we say meticulously and methodically, it can be time consuming, but diamond exploration is time consuming. And if you don't have immediate gratification, you'll tend to lose the interest and attention of some shareholders, and they'll move on to other things. So that is why, again, we have brought in mining opportunities, producing opportunities, as well as development opportunities. I've often been asked, what is the size of the prize that you are looking at in Lulo? Well, if you will recall the Africa Down Under presentation that we gave, I put a side-by-side comparison to one of the most famous high-value diamond mines in our industry, and that is the Letseng mine in Lesotho. If you have a look at the grades at which we are recovering both our alluvial diamonds, and if you have a look at the most recent announcements and look at the grade with which we are recovering our sampling diamonds in L164, you can see that the grades certainly mimic those of Letseng. When you have a look at the kind of diamonds we are recovering, we've shown you already the diamonds that we're recovering from the sample. It certainly is of a coarse nature. And when you look above the ground, we are recovering the best diamonds in the world at one of the highest dollar per carats in the world as well. So when you add those two equations together, you get a very, very significant and special mine. So that is what we're looking for. From what we look at the geophysical anomalies, I don't think we are looking at a Zhuaneng or an Arapa type deposit, but we are certainly looking at a deposit that delivers the best, highest end diamonds in the world. And that is what we believe we're getting closer and closer to on a daily basis. If I start through the operations now in Angola and the Lulo project, this is our oldest assets or are our oldest assets. And we've been focusing in this area since 2008. We have built a very unique mine there, and we continue to push our exploration strategies there. The Lulo mine is a very, very special mine. The diamonds we recover here are unrivaled. Every time we go to Angola, every time we have a sale, we are approached all the time to ask if we can consider additional buyers. The problem that we've had with the mine is not one operationally, not one from the diamonds that we are recovering, is not one of grade. It's not one of capacity or operation capability, because we continue to tick those boxes on a day-to-day basis. The biggest anchor, we believe, obviously, and I think most of our investors who we talk to quite regularly, is the repatriation of funds from Angola. It has been a journey to get this done. I'm very, very glad to say that that is behind us. You will remember for many years, we have repatriated funds from Angola. We have used other channels to repatriate those funds, i.e., if you do capital imports, you are able to return funds under that capital import for a similar value back to the center. We have utilized those channels. The only channel now to return money back from Angola is to start repaying the loan. When I say start repaying the loan, it is the money that we have put into Angola through working capital advancements, i.e. the staff that we have employed over the years, the meals we have provided, etc., those that aren't represented by physical assets. So the loan value at the beginning of this year was around about 39 million Australian dollars. We held the General Assembly for Lulo in 2021. The partners approved a $10 million loan repayments and a $10 million dividend. So I'll take some time to walk you through that process because I believe it's important to understand it, and it's important to understand that that is behind us. In terms of the dividend, that was declared in December 2021 for approximately our 40% of $10 million. The reason you see 3.6 there is you take out the withholding tax due on foreign dividends, and it remains at 3.6 million, or results in 3.6 million, or circa 5 million Australian. This process was far quicker than the loan approvals, and I'll tell you why. It is a distribution of a profit. It is a distribution of a dividend. What the Angolan National Bank requires of you there is audited financial statements. If you're declaring dividends from a year that is not yet audited, the latest management accounts, and they also then require the shareholder approvals or the partner approvals granted at the General Assembly. Those we provided, and that is why that was released quite immediately, and the approval provided in February, and those funds flowed in February as well. When it comes to the loan repayment, the Angolan National Bank wanted to look at all of the debits to the loan account dating back to 2007, 2008, when Lucapa invested in Angola. As you can imagine, we have funded quite a bit into Angola. There are many transactions, there are many items that we have put into Angola, and the Angolan National Bank and the Investment Authority audited and ticked and bashed every single item that we had spent money on. It took them a long time. Yes, we do believe it took longer than necessary, but the process is done, it's complete, and the National Bank have provided their approvals as we announced in August of 2022. So we started to remit the funds from that $10 million that were approved back to the center. From the announcements, you will recall, we remitted 2.9 in August, we remitted 3.1 in October, and we have remitted the balance now in November and December. The reason these have come through in tranches and not all at once is that you'll also remember our announcement that we put out with regards to a very special tender that accreted 30.1 million Australian dollars in November. From July, we had already started taking diamonds and keeping them in inventory to place on that November tender, therefore impacting the cash generating ability of the mine. Once that had run its course, as you can see that during that period, we took some money out, but once that sale concluded, we have taken the balance out as well. So the full approval at the 2021 General Assembly is now done and dusted and settled. Every other time that there is an approval from the shareholders at the General Assembly or in between, those funds should flow relatively quickly with all of these approvals behind us now. In that regard, I'm very happy to convey as well that at the recent 2022 General Assembly that we held in Luanda, the shareholders approved a further 5.9 million Aussie equivalent loan repayments to Lucapa, accompanying a 5.9 million dividend to the shareholders as well, of which our 40% share will be 2.4 million. We should expect another circa $8 and a bit million to flow back to the center in Q1 next year as well. So as you can see, it has been a long road, but the repatriation hurdle is behind us, and we should not face this kind of delay any longer. We will be able to remit the funds back to the center. If you have a look at the balance pre and the balance post, just in the 1 year 2022, we have knocked 40% off the balance of that loan. So we fully anticipate that through our mine plans and our budgets that we have going forward at Lulo, that loan will be repaid very, very quickly and allow us to continue our strategic development and investment. And other news around the operation as well, I think you'll have all seen the results of the elections in August. It was won by the existing government, the MPLA. The minister has been reappointed, Minister Azevedo, and so too are the boards of both Endiama and Sodium have been reconfirmed. 1 or 2 directorate changes have been made, but the chairmen of both of those state entities have been given a further mandate for another 5 years. That's very positive for us. I think over the last 5 years, we have developed very, very strong relationships with both of those companies. And it's very, very good to see that those relationships will continue for the next 5 years. Obviously, if they had been replaced, going back and revisiting our strategy, what we've been doing, how we've been doing it, could result in further delays. But I think that we will see our business conducted as usual there. From an operational perspective, the mine, again, as I've said, continues to tick operational boxes. It continues to tick our growth strategy and delivering more volume to the plant. It continues to tick additional capacity, not just in our alluvial plant, but we've got 3 operating plants at Lulo. We have our alluvial operating plant delivering significant value. Further afield, 20 kilometers away we have our infield screening plant that screens gravels from far afield down to approximately 30%, taking a lower volume back up to the alluvial plant so that we can save on our operating capability as well. We are growing the capacity of those plants. We have already deployed a DMS module for that plant. So we should see further capacity improvements going forward as well. The third plant we have at Lulo is our kimberlite bulk sampling plant, and I'll spend a little bit more time on that on the next slide as well. So operating wise, we're very chuffed with the team on the ground. The budgets that we set for them and approve at the General Assemblies are very, very tough budgets, and they continue to deliver them on a year-by-year basis. Our results so far are largely in line. I don't want to give too much away of what's being generated there, but suffice to say that our December quarterly update will contain both the quarter results and the year-to-date results, and we'll release that to the markets in January of 2023. From a Lulo kimberlite exploration perspective, I'm not going to labor on the fact that we have one of the most special projects in the world, but I think every time I talk about it, I'll continue to remind people we have got a lot of interest in what we are doing, both internally in Angola and externally. I do want to just overview very quickly what it is that we have been doing on the ground there. It's taken us a considerable amount of time to do it. Naturally, exploration takes the amount of time appropriate to the investment being made to do that. Obviously, if we had far more money to throw at it, we could have expedited it. But when we have been largely self-funding it over the years, it is a little bit more time consuming than we initially would have hoped, but we have delivered. It has been a meticulous, methodical process. If we just overview what we've done there and where we are in terms of a bulk sampling phase, we have done airborne and ground surveys over the full 3,000 square kilometer concession. We have discovered over 500 or identified over 500 geophysical anomalies or outcropping kimberlites. Just 360 or approximately 360 are in the Caquilo Valley alone. And when you look down underneath you, obviously it is a huge task. Are we looking for the proverbial needle in the haystack, or as we believe, needles in the haystack? But we have selected over 140 of those geophysical anomalies and outcropping targets to drill or sample. We have confirmed and discovered over 120 kimberlites. There is no other program on the go at the moment globally that is discovering kimberlites and converting targets to kimberlites, taking them through the mineral chemistry analysis, identifying for bulk sampling phase like we are. There is no other program of this kind. From the 120, we have taken over 90 samples through to mineral chemistry analysis, and our team downstairs and other peers in the group that we always bounce our thinking and logic off have identified 20 priority targets to bulk sample. An initial 16, and we have added 4. But as we continue to go through our our kimberlite exploration and confirmation phase, we will likely add more to the bulk sampling phase and test those in time to come as well. But the reason why we call it an advanced program is because we are at a bulk sampling phase. We are not looking for things that may tell us that there are diamonds around us. We are actually looking for the diamond content itself. We've got enough indicators and garnets and ilmenites and big diamonds above it coming out that tell us that we are in a good environment. But where we are now is at the advanced phase of trying to get diamond content out of those pipes. It's the best way to assess diamondiferous content. Drilling in a sparse mineralization or nugget style deposit is not going to get you a sufficient quantity of commercial diamonds or even micro diamonds in a type 2 environment for you to be able to appropriately assess the diamond content, both from a grade perspective, the quality perspective, and size perspective. So bulk sampling is the best way to do it, and it provides us information with quickly to either count a kimberlite for further investigation or to discount it and remove it from our program. It has not been a perfect bulk sampling phase by any means originally. Whilst our alluvial plant certainly delivers good capacity, it doesn't have crushing circuits. So yes, we will recover a good portion of the diamonds that are easily liberated through the soft material that we put through the plant. We won't recover every single diamond because we won't be crushing and liberating diamonds. That is why we, as part of the capital raise last year, we scoped a standalone kimberlite bulk sampling plant, and that was commissioned in Q3 2022. And we have seen that we've already, or you've seen that we've already started putting samples through, and we are looking to put 2 samples through every 6 weeks. And you'll have seen the results that these can deliver very quickly with the recoveries that we have announced to the market from the initial processing of kimberlite 164. Just very quickly on kimberlite 164, it was a pipe that we identified and put onto our list largely from the mineral chemistry results that we received, but certainly from other considerations as well. Dilution, proximity to operations, proximity to large stone blocks, etc., etc. But if I can point, if you can see where this marker is on the screen, L164 is quite a long way from our mining operations and from our camp and processing plant. It's some 30 kilometers away. I don't think that it is understood widely that although these dots look close together on a map, it is over quite a large area. And none of these dots have, national roads going to them. We, as part of our program, whilst we spend a lot of money drilling holes, we expend a lot of time and effort and investment in building a road network in a very, very remote area. We have over the years expanded this road network. I think that the last number at the General Assembly that was touted was over 240 kilometers of roads have been developed in the Caquilo Valley area. Our road network is now significantly advanced. Our access into all of these areas is a lot better, and therefore we are better able to go and extract the kimberlite bulk samples out and take them through our bulk sampling plant. But 164 has been on our priority list for a while, and I'm glad now with the road network, we've been able to go there, extract it, and take it through to the bulk sampling plant. The reason why we liked it, if you look on the right-hand side and you see those photographs, you see large megacrysts, garnet megacryst as well as ilmenite megacryst. If you have a look at the scale compared to the pen and the ruler there, they are large. The reason why we like large garnets and ilmenites, it bears relevance to potentially the size and the coarseness of the diamonds that we could find in those kimberlites. Now, not all garnets and ilmenites derive from the diamond mantle, but certainly the size is one that we like because we are recovering big stones above ground. So we're very, very excited about what we've been recovering at 164. just from the first 20% of the sample that we have processed, we've recovered a number of diamonds with an average stone size that indicates that we are certainly looking at a coarse large stone population within the pipe. We look forward to putting the remainder of that bulk sample through the plant, and it most certainly has elevated itself right to the top of our program in terms of immediate pipes to follow up. I think importantly, one mustn't lose sight of the kind of information that this discovery and this kind of results gives our geological team downstairs and on site. It certainly provides, or goes a long way to providing information into a blueprint and an assist in unlocking the geological code. Using the characteristics from this pipe and applying them to the other kimberlites that we have already identified and got mineral chemistry from and other data from certainly will assist us in prioritizing the kimberlite program. You may see some numbers slide up the program. You may see some numbers slide down the program, and you will certainly see others brought onto it as well. But in terms of the next steps, we're not going to stop and bulk sample this kimberlite on its own further and further. And I'll tell you why. We do not believe that we are in an environment where we have got one source. From the number of mining blocks we have, the alluvial diamonds we have been recovering, the different characteristics that those alluvial diamonds have shown to us, we believe that we're in an environment that has got multiple contributors. So we want to get through all of our priority targets and identify those that are the potential contributors to all of our mining blocks. If you have a look at L164, certainly we believe it can be a contributor to the diamonds that are slightly north of it, including mining block 46, which has also been a high-end large stone mining block for us. But is it a source for the mining blocks that are 20 kilometers north of it? Potentially, but we do believe that we have got other kimberlites closer to those areas that are potentially the contributors to those blocks as well. That is why we need to work through every single kimberlite that is on our bulk sampling list and identify those that will be there for immediate follow-up. Certainly, L164 is right at the top of that list, but we do need to complete our program in terms of initial bulk sampling. So we will use the information that we have gleaned from this. We'll start to evaluate this kimberlite from our initial bulk sampling, and we'll start to prioritize and reorder those that are already on our list. But yes, it will give us information as to the potential economic state of this kimberlite, and we'll continue to look at that. We will need to do larger bulk samples, recover larger quantities of diamonds to start looking at grade content, potentially much deeper through LDD drilling, recover a larger quantity of diamonds to assess from a quality and price perspective as well. But certainly very, very exciting times at Lulo. Our kimberlite bulk sampling plant will be processing these very, very regularly, and we will be bringing news to the market more regularly. From a total investment perspective, from Angola jurisdiction perspective, from a Lulo perspective, Angola is the most prospective diamond country for new discoveries globally. And the reason we know that is there are huge amounts of carats that are recovered annually from both industrial or commercial mining operations, alluvial operations, as well as artisanal cooperatives on various concessions as well. The sources for those diamonds have not yet been discovered. There are a very small handful of operating kimberlite mines in Angola, and they are not the sources of the diamonds that are being discovered. De Beers re-entering Angola, Rio Tinto re-entering Angola, Anglo-American coming into Angola, other large mining houses that are not listed coming into Angola, tells you that things have changed, tells you that the government are doing the right things, and certainly elevates Angola right up there for source discovery potential. So We certainly believe we're in the right jurisdiction. We have been there for a long time and will continue to be there for a long time to come. In terms of a bulk sampling summary, some of the questions that we have received in the days leading up to this webinar is, can we provide an overview of our bulk sampling? So this slide just goes to address some of those questions. We have to date processed 20 kimberlites through either the alluvial plant or the standalone kimberlite bulk sampling plant. 8 of those have been sampled that are on our priority list. 10 kimberlites have been identified as diamondiferous. If you look at the list of diamondiferous kimberlites below it, you can see that 2 of them are on our follow-up list, most notably L164, which is right at the top, but also L28, which you'll remember that we previously announced and recovered very nice diamonds, a high percentage of type 2A diamonds that came out of L28 as well. So those are the 2 that have elevated themselves to the top of our follow-up list, and we look forward to continuing to evaluate those in due course as well. In terms of the kimberlite sampling plan going forward, we have listed the kimberlites that you can see there on the screen, 29, 56, 25, 21, and 219. And the status, those that have been excavated, those that we are busy excavating, and those that are planned to be excavated. You can see in that picture L56. You can see there is a bit of water there as well. You'll recall from previous presentations, L56 lies in a Lazaria area. So we have got in during the dry season and excavated a good portion of this kimberlite already and put it on the ROM pad next to the kimberlite bulk sampling plant. And we'll go back again to complete the sample once the rainy season has finished. But during the rainy season, we'll go to the higher lying targets, priority targets or priority kimberlites, should I call them, and we'll excavate those, put those in the ROM pad and treat those through the wet season as well. But those are the next 5 samples that are currently planned to go through the kimberlite bulk sampling plant. Moving on to our other operating mine in Lesotho, the Motai mine, in which we own 70%. That was our first brownfields development, a kimberlite pipe that had been undeveloped for many, many years. And we have built a really good mine there. You will have seen through recent announcements that we have been facing and dealing with a few processing issues, mass balance, as well as the constrained mining environment and logistically constrained environment hampering our mining activities. But I'll provide an update on that shortly as well. But just to overview Motai, it is a high-end mine. It is in the top 5 US dollar per carat kimberlite resources or productions globally. We're averaging over 700 US dollars per carat, or in and around 700 US dollars per carat there on average. And I think as we stand now, that'll put it at number 3 in terms of kimberlite productions globally. You will know that the elections were also recently concluded. You'll also have seen from the media that it was won by a new political party led by prominent Lesotho businessman, Sam Matekane, who started a new party. Sam Matekane is a very, very experienced businessman, very, very experienced in the diamond industry in Lesotho. And I think that both his constituents as well as the government are very excited about what the future in Lesotho will bring there as well. We've got a new natural resources minister that has been appointed. We have already met with him. We have certainly conveyed both the benefits and our constraints at Motai and what we would look for in the government to assist with going forward. And most notably, it is the VAT amendment bill. It is on hold. Certainly, we ourselves, together with the Chamber of Mines and other fellow miners in Lesotho, have conveyed to the government what we believe the impact will be on the industry if that is put through. And that is why it was stopped. It is on hold, but there has been no official communication as yet. I think the new government are getting their feet under their desks and I'm sure we'll have news on that in the not too distant future. But in terms of Mutai, in terms of actually applying the solutions that we have to address the mass balance constraints, and applying the solutions that we have to assist the mining contractor in bringing the mining plan back to where it should be, we are not going to put significant investment to Mutai until such time as they have confirmed that the VAT bill is gone. We are not wanting to put any of those solutions in play just for the VAT bill to be implemented and the margins to be squeezed on the mine. So whilst that is still in play, we will certainly address the mass balance constraints the way we are. We are applying very low cost solutions. We have derived a solution which we believe will lift the revenue up by some 30% from a throughput perspective on a revenue per hour. Through some significant limb modeling, we will release capacity on a recirculating load within the plant to be able to take in brand new fresh load at higher dollar per ton and higher margins. And we believe that in the interim, that will certainly bring back margins to Mutai as an operation. But we look forward to the VAT amendment bill being expunged by the government, and then we will tell you what it is that we'll do there as well. There is a lot of value in the Mutai mine, but certainly with the VAT amendment bill around, we have been looking strategically at what it is we can do at the mine to realize the full potential of our investment there, and we'll continue to do so into the future. From a cash perspective, from a strengthening the balance sheet perspective, yes, we have been assisting Mutai in reducing the IDC loan. It was an original $100 million or 10 million Australian equivalent loan that we brought in to develop the project. We have repaid to date some 66 million Rand of that, or just in 2022 alone, 44 million Rand. That loan now only stands at some 2.8 million Australian dollar. We have focused tremendously in 2022 on reducing our debt on our balance sheet and strengthening the balance sheet. So together with these repayments, together with the payments that we've made against the Equigold loan, together with the large payment that we made against the New Zealand loan, we have expunged approximately 20 million Australian dollars of debt, interest-bearing debt, off the Lucapa balance sheet this year. One of the questions that we received is, what is it that we are applying the cash that we generate from Lulo to? Whilst we apply it to strengthening our balance sheet and reducing our debt, we also apply it to furthering our projects. But we have taken a large chunk of change out of our interest-bearing debt, and that will be fully repaid in the early part of the second half of next year. At the moment, our loan into Mutai is around about 69 million. The reason I am quoting our loan into Mutai here, and I quoted it on the previous Lulo alluvial slide as well, is that the loans owing to us from our revenue generating assets are more than our market cap today. So therefore, when you take into account the Merlin development project and the value that we believe that will bring, you look at our exploration projects and particularly Lulo and the value that will bring, we certainly believe, and here I'm answering one of the other questions that we received in terms of our value and why we are where we are in terms of market cap. I do not believe we are fairly valued. I'm sure there's no CEO globally that will tell you that they are appropriately valued or overvalued, but considering our asset base, considering the projects we have knitted together and how we are furthering them within our portfolio, yes, I certainly believe that our industry and our market is undervaluing Lucapa at present. Moving on to the next project, I think I've covered certainly the operational side of it and the constraints that we are facing at Mutai. It is operating in line with our revised forecasts. The reason I put revised forecasts there is because naturally we've had to build in the mining constraints that existed through the constrained sourcing environment or logistics environment through the year, and most certainly the constraints on our processing capacities. But it is operating in line with our revised forecasts and we'll have more of that in the December quarterly as well when we release that in January. Moving on to Merlin in the Northern Territory in Australia. Again, I'm going to reiterate that it is not another small asset that we are adding to the portfolio. It will transform, through its development, Lucapa into a mid-tier diamond producer. If you look at the scoping studies that we have released both in December of last year and March of this year, the production target of 2.1 million carats over an estimated 14-year life of mine will bring approximately 150,000 carats per annum into Lucapa's production stable. That will more than triple our current production, and it will certainly elevate us into a plus 200,000 carat per annum producer straight into the mid-tier categories. That is what we are focusing on. That is what we want to deliver. That is why we have taken it to a feasibility study. That is what we are working hard on delivering. In terms of the feasibility study, in terms of our hybrid open pit and vertical pit mining methodology, we are wanting to deliver the nth dollar back to our shareholders. Our teams have not just taken the methodology and the processing plants and the way of mining that we had in the scoping study and furthering that. They constantly are looking at ways of improving those scenarios. And that will also provide some delay in terms of the timing, in terms of how or when we bring it out. We are looking at lower upfront capital solutions. We are looking at ways to generate cash earlier as well. We're also looking at ways of putting in different processing methodologies that don't require as much power generation. We're also looking at the hybrid solutions, the original scope solution of a solar and diesel opportunity. We all want to become greener, so we are looking at a hybrid solar/gas and other opportunities in terms of generating power. That all adds timelines to a project timeline, because you've got to take them to a level capable of being included in a feasibility study. But we're progressing them. We're progressing them well. We are experiencing certain delays from our consultants as well, but we believe that we're on track to deliver it in the first quarter of next year. It is a significant addition to Lucapa, one that we look forward to bringing to the market, one that we look forward to providing a funding solution on. We continue to actively explore the funding solutions. We are talking to finance houses, both private as well as state or government financing houses, but we are also looking at other solutions, those that involve obtaining funding for offtakes in advance, those that involve looking for a partner, i.e. a partial sale in the project to bring in funding for it as well. So we're actively exploring all of those, and we look forward to providing a funding solution to deliver that as well, that we believe will provide the ultimate value to our shareholders, or grow the value to our shareholders. What we haven't announced previously, and what you've seen here, is more process and admin that has been ticked. We have announced that previously we had the deed of assumption with regards to the mineral lease approved and signed by the traditional owners. We now have ticked the box on the exploration license as well. That has been approved. Also, we applied for a new mineral lease, and that was received last week, where we've been granted a new 25-year mining license or mineral lease at Merlin, expiring in 2047. We look forward to bringing the value here to the shareholders. We look forward to developing a project in a tier 1 jurisdiction. There is a significant amount of information that we have on this project. It is not as brownfields as, for instance, Mutai. This is a pre-mined environment. Over 500,000 carats have come out of the ground here from Rio Tinto and Ashton mining back in the day. Why do we believe we can deliver the value here versus previous operators? Well, it has remained mothballed for so long because, well, for two main reasons. Unviable mining methodologies that have been promoted by previous operators. Our team downstairs have worked hard and come up with a very, very unique hybrid solution to extract value through the vertical pit mining methodology. We reduce the investment required in waste stripping, some 35 million tons alone just on one pipe, when you multiply that by, on average, $5 a ton to drill and blast and remove, you can see just on the one pipe, we are releasing some $150 million in value just from not waste stripping. So it should and will release value from mining those pipes. Whilst I don't want to give the team downstairs, our technical team, all the credit, they do a wonderful job. We must be mindful of the fact that we're also operating in a much better diamond environment with higher diamond prices than the previous operators as well. So whilst I think our team downstairs are very good problem solvers, we are also benefiting from a very different diamond pricing environment, and therefore that adds value to our development as well. We also are going to go further. We have been evolving and trademarking a brand in various jurisdictions globally. Once that is completed, we will bring that to the market in 2023, and we'll start to grow a unique Australian provenance-driven brand as well. And we look forward to talking to more of that in 2023. So Merlin is going to be a very strong project for Lucapa. It's going to bring a lot of value. Yes, it must bring mining value, but it's also going to bring value from downstream initiatives as we continue our journey closer to the consumer. So I think I've labored on for long enough. I think that we're nearing 50 minutes. So I'm just going to overview very quickly what we have in store for us in 2023 before I open up to Candice and the questions. Lulo, it's going to be boring. We want a boring mine. We want a boring producer, as is alluvial operations. We wanted to deliver the big diamonds, deliver the cash flows, and deliver the value back to the center. That is what it was set up to do, and that is what we wanted to do in 2023. We're scaling up our kimberlite exploration opportunity. We will have far more results coming through from our advanced bulk sampling stage. You can see the kind of results that have been extracted from L164. We certainly believe that will continue to provide us with the excitement, but we also believe that we are on a project that has got a number of contributors to the diamonds that we are recovering in our alluvial operations. We'll be bringing a resource update to the market as well, but we are also starting now to expand our alluvial exploration activities to the river after which our concession is named, and we'll be taking our exploration fleets and activities there during the course of 2023 as well. As I mentioned, we'll see more loan repayments and more dividends flowing back to the center. Another question that we have been asked during the course of the last couple of days is, what is the update on the majority stake? We did provide an update in the half-year report that was released at the back end of August, where we noted that it remains a very important work stream to Lucapa. Just because we haven't said anything about it, it is something that we focus on each and every day. The interaction with the government on this work stream is much more frequent than it ever has been, and we do believe that we will deliver it. No, I can't give you a timeline because there are nuances that they are dealing with in terms of our requests and our conditions, and there are certainly nuances that we are also building into our programs to address their requirements as well. We're making headway on this. We continue to deal with it. We believe it is very important, and we'll have news on that going forward as well. With regards to Matai, we look forward to the trial that we are going to run in terms of extracting additional capacity in the plant. We are going to bring to the market as well the studies that we are currently implementing or looking at in terms of a vertical pit mine development. The value that is released in Merlin certainly will elicit or extract value in terms of a development at Matai as well. We believe that the country rock around us at Matai is even more competent than exists in the Northern Territory. So, Matai lends itself to a vertical pit mine development as well. We will also bring an update on the VAT Amendment Bill. As we hope, when the government expunges the VAT Amendment Bill, we'll be able to tell you more strategically what we are going to be doing with that operation as well. From a Merlin perspective, we want to deliver the best feasibility study we can, and we look forward to delivering that in the first quarter of next year as well. We'll continue to implement and work through our environmental approvals that we require, and we will also continue to further the funding solution for the Merlin development as well. From a Brooking and a Rapa perspective, our other two exploration programs, yes, they have been on the back burner for a little while since COVID came through, but we have got drilling programs that we have put together for those operations, and we look forward to getting back onto those projects and delivering the results from that ground in 2023 as well. I think from a diamond market perspective, as I mentioned, we are dealing with a much better diamond market overall and environment compared to that existed before COVID, but it has been soft over the last 6 months. Our market peaked from a rough diamond perspective in February of 2022 this year, but because of a number of events, Russia invading Ukraine, the inflationary environment that we're dealing with and the increase in the interest rates, as well as China lockdowns as a result of their COVID policy impacting on demand, has seen diamond prices soften over the last 6 months, but we firmly believe that is short term. Fundamentally, the natural diamond mining environment remains constrained. Mines are closing. I've listed Diavik, Ikati, Gachagua, Koffiefontein, and other smaller mines that will be closing this decade. The supply environment is going to get more constrained, and the demand environment is one that is only growing going into the future. So fundamentally, we are in a very good industry. We certainly see value to be derived. We certainly see a much better next 20 years compared to the last 20 years we've had in the diamond space, where it's been oversupplied. And that therefore bodes well for our continued investment in the projects that we have in our portfolio. From a corporate perspective, we're going to continue reducing our debt. By the early part of H2 next year, we will be debt-free. Our current interest-bearing debt will have been repaid. So looking back where we were announcing debt figures or group debt figures of the early 30s, that we are going to be debt-free in the next 7 months. And certainly, a period or a time that we are looking forward to. We believe that has been one constraint or another constraint on our share price. With the inability to repatriate funds out of Angola, it certainly leaves a concern that we've been unable to repay that debt. But now that one constraint has been lifted, I certainly believe that the debt repayment capability or capacity will also have been lifted. We'll continue to try and unlock shareholder value through the advancement of our projects. I know that some shareholders are more interested in exploration, other shareholders are more interested in our development assets, and then we've got shareholders who are more interested in our producing assets. But across our varied shareholder base, we'll continue to deliver on all of our assets, and we'll continue to further those and bring value from those. As I mentioned earlier, we have developed a brand. We've been trademarking it in the various jurisdictions globally. We want to trademark before we launch it, and we will tell you in 2023 more about that when we bring it out to the market. M&A sits down there, not from a fact that we are going to go and merge or going to go and find a partner. M&A sits there because we actually have been doing the A part of the M&A for many, many years already. Yes, I believe that the diamond industry needs bigger companies. It needs consolidation. It needs companies to merge. But whilst the management teams and shareholders work through those that are good for them and those that are bad for them, we're going to continue focusing on the A part. We focused on the acquisition of Matai. We focused and we brought in Arapa. We focused and we brought in Brooking. We focused and we brought in Merlin. That is the A part that we're working on, and we'll continue to acquire the assets and the projects that we believe will unlock additional value to Lucapa and our shareholders. I do believe, as I mentioned in the strategy, that delivering a bigger company will attract bigger investment. It will certainly see our share price appreciate and take us to a market capitalization that we believe is more appropriate for the asset base and the management team expertise that we have in our company. So I think I'm going to pause here. I think it's been a long rant from me. I hope that I've provided, not just updates on what we've got in the market more recently, but a little bit more color on the aspects that we are dealing with in our projects on a day-to-day basis as well. And I'll leave it to Candice to go through a number of questions that we've received as well. Thanks, Candice.
Thanks, Stephen. We have quite a few questions, many of which were covered in the presentation. We have some specific ones on the Lulo kimberlite exploration program. The question is, E174 is only a short distance from L164. Will the company be revising E174 based on the results from L164?
Candice, thank you. Yes, the answer to that is most certainly. E164 has already been converted to an L. E171 has already been converted to an L. It has been confirmed as a kimberlite. Certainly from the results that we've got here, we'll be applying at 164, we'll be applying that to all of our results, and it will probably result in a number of kimberlites being brought into the priority list, including that one.
Yeah, the next one's quite long-winded, but I'll truncate it. In layman's terms, what is so unique about this area of the African continent, being Lulo, and that the mantle has offered up its very best diamonds along the fault lines and river systems in the concession LOM hold?
Look, I think there's only one being, if I can call it, that will have the answer to that question, and they don't reside on the planet. If we had those answers, I think that all the diamondiferous kimberlites globally will have been found. What we do know, as I mentioned earlier, is that there are a significant number of kimberlites on the Lucapa Graben in Angola. There are a significant number of alluvial diamonds that are being recovered daily in Angola, for which the sources have not been discovered. Why do I believe that, or we believe that the Lulo concession is extremely special? It's not because of indicator minerals. It's not because of things that may or may not have been derived from the mantle. It is because of the actual diamonds that we are recovering above those very targets and kimberlites that we are exploring. These big diamonds have not traveled very far. The sources of these diamonds have not been discovered. There is no diamond mine, kimberlite diamond mine in Angola that delivers these diamonds. It's undiscovered. We believe that we have the best chance in this environment and that location to discover the source of these diamonds. So I think I've answered it in a roundabout way.
Can you please provide an update on the river diversion? Has it opened up any more kimberlite targets?
The river diversion is just one of the methodologies that we use to open up alluvial mining blocks, not kimberlite targets. The river diversion that we ran here was to release alluvial gravels that were deposited in days gone by underneath the current river system. So that has allowed us to access mining block 19, Lazaria areas, and take out the gravels there as well. So it's just one of the mining methodologies that we utilize to open up various gravel horizons. From a kimberlite perspective, whilst some of the river does go across a number of the geophysical targets and kimberlites that we have discovered, it's not going to identify new targets, but potentially we may in due course look to move those rivers as we assess the opportunity of those targets that do lie under the current river system.
Okay, the last one on bulk sampling. Are you able to advise which kimberlites you have bulk sampled so far? We've covered that. Which are earmarked to be the next few? Which would you think are the most likely to have fed into blocks 6, 8, 28 and 46?
Look, certainly on our priority lists, we have put 20 on there that we believe have got stand a very strong chance of being the kimberlites that have fed all of our mining blocks, including those ones named that are further north in the Coquilo Valley. From our perspective, we'll be putting those through the bulk sampling plant and assessing it. Do we believe 164 could have fed those that are further north? There is the potential, but we don't think so. But certainly there are closer kimberlites that will be going through our priority bulk sampling program that have the potential to have fed those.
Turning to Merlin next, are you on track with production of Merlin mines, and what are the projections of carats and fancy coloured diamonds from the Australian mine?
I think I've answered some of that question. Certainly haven't given a view on the fancy colour content. When we look at the diamond recoveries and sales that have taken or that have happened in the past by Rio Tinto, we've got a significant database from the 270,000 carats that they have kept this kind of specific information for. 7% of the production from the various pipes is coloured. It is a much higher percentage than the average diamond mine, but certainly a percentage that we believe is actually quite relevant for the Australian environment. We all know the Argyle mine, we all know the Ellendale mine, and certainly the Merlin mine, very, very famous for its high percentages of fancy coloured diamonds. So yes, we are expecting a number of fancy colour recoveries to come from the Merlin project. In terms of timing, I think I've provided the information on that. We certainly will have a feasibility out in the first quarter of next year. In terms of timing to production, let's complete that feasibility. Let's have a look at the funding solution, because those two will be probably the major contributors to the timing of the funding. But all things being equal, we do want to be mining and operating late 2024 and the very latest early 2025.
Okay, now there's a couple on the cutting and polishing. Between Lucapa and our partners, could we see the small number of exceptional stones being auctioned by the likes of Sotheby's, etc., following a worldwide roadshow?
Yeah, that answer is or that question, should I say, is a very good one. It's something that I've been working with our Angolan government partners for actually a number of years now. In terms of the current regulations, the very important stones are required to go to a tender. I think, yes, they do need to be tendered or auctioned. That is most one of the better ways of delivering value. Yes, they do need to go on road shows to garner additional interest. No, I don't think they need to be on a Sotheby's or Christie's kind of auction. But we're looking at additional ways of accreting value, i.e. working with the government to update the regulations to potentially cut and polish those very important ones that are currently required to be tendered in rough form. So it's something that we actively work on. We want to accrete additional and more value from our rough mining production, but we also want these kinds of stones to feed into our brand in due course as well. So it is something that we focus on day to day. And in terms of the question that's asked, absolutely additional value will be delivered through being able to market it further afield.
Another one on cutting and polishing. Can you talk about LOM's future revenues with Graph and others as LOM attempts to capture revenues beyond the mined gate?
Yeah, I'm not going to mention Graph particularly because I think he is a niche retailer that takes a certain kind of production. Certainly, I'll talk to retailers in general that take a number of qualities and sizes of production which our mines generate. So talking about it more holistically. As we start to advance further downfield, our first toe that we dipped in the water there was to partner and start showing and accreting the kind of margins that we have previously conveyed to the market back to us. We will look to do that more and more going forward. We certainly want larger portions of our production to go through to the end user, to the consumer, and to the retailer. Does that mean we will start to work with retailers and cut out a number of people in between? The obvious answer is yes. We want to make sure that our marketing and our mine to market, so to speak, has as few participants in between it so that we can ensure that we extract maximum value both for our shareholders and our partners in the countries that we operate in. So yes, we will look to work with the likes of Graph, the likes of other retailers to ensure that our product goes to the consumer and we can accrete additional value.
Okay, we've got one here on repatriation of funds. Confirm application of the $20 million repatriated in 2022 year to date. Example, Merlin expenditure, Matai advances, other material expenditure, and cash held. I guess that's one for the quarterly, but you can answer that one.
Yeah, look, a lot of that we will put in the quarterly, and we will show how the cash generated through the course of the year has been applied to the various projects. But I think I did outline a little bit earlier that we have expunged an equivalent 20 million Aussie dollars in debt and strengthened our balance sheet considerably by returning funds to the centre. And at the same time, we've applied funds that we raised in the capital raises to build the bulk sampling plant to further and advance our kimberlite exploration project. So those funds that we have pulled back to the centre and raised have been very, very well spent. And we look forward to providing a summation of that in our quarterly release.
Okay, I've got 3 questions to go. The next one is about majority ownership. However, I believe it's been answered. So we probably won't cover that one again. Having read the PowerPoint, appreciate some clarification on M&A activity in 2023 under corporate last line.
Yeah, Candice, I think I've given a bit of colour on that question as well. But I suppose what we want to just add to what we've already said is that we're not going to do it for the sake of doing it. The assets that we look at have to add value to what we're doing. We have to assess them as having value to be derived from bringing them into the stable or merging. It's not a matter of just doing it for the sake of doing it. And we'll continue to look at assets as we have done for many, many years that we believe will add value to us. So, it's something that we will continue to do. We look at every project globally. As more information comes to the market and to us, we will assess the opportunities that are out there.
Okay, final answer. How can it be that Burgundy can be at a market cap of 105 million when we're about 75?
Look, I can't speak for other companies. I think in terms of what they are doing is up to their boards and shareholders to follow. I think I have outlined that I do believe that we are significantly undervalued. Compare the assets that we have, compare the teams that you have, compare what has been done on the various assets through all of the listed diamond companies. And I think you'll see that we have by far been the most active through all the pillars. I think the value will be derived, and I'm pretty sure that the value will be recognised in due course as well. But I'm not here to comment on other market caps. I just got to focus our efforts, our board efforts, and our team efforts on increasing our market cap.
That's it for the questions.
All right. Well, thanks, Candice. And thank you to everyone for joining. I hope I haven't taken too long in giving additional color in what we're doing. But as I mentioned earlier, I look forward to doing this more regularly, providing updates potentially on the back of each quarterly and any other important announcements that we have going forward. But thank you for your time.